Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video of trade strategies for the week beginning August 24th. It's coming Monday. And as usual, we just do a brief video with 2 or 3 potential trade setups for the next week for our YouTube and Twitter followers and our Traders News members on our website. And this video is a very, very brief version of what we give the video every week, and actually twice a week, for our DT Report subscribers. If you like what you learn in this video, it should be educational as well as an analysis of trade strategies for specific markets next week. Well, if you like what you learn, check out my book, High Probability Trading Strategies, and also check out a 1-month trial to one of our DT Reports from just $19 for an entire month of daily updates. Okay, that's it. Let's get at it and see where we're at with a couple trades for next week. The first market we're going to look at is the NASDAQ. Look at this beautiful multiple time frame price targets based on some Elliott wave pattern structure. As of, this is data, 240-minute data as of the end of the day on Friday, and this price relation, or this price zone here, 11,495 up to 11,570, which is, boy, the high on Friday was right around 11,570, is 3 time frames of end of wave 5 targets. So if we take the 162% external retracement of the range of wave 4, that's around 11,526. If we take the 127%, external retracement of wave 4 of 5, the 162 anyways, right around here, you can barely see it, but it's about 11,559, something around in there. And then if we take the 127%, external retracement of wave 4 of 5, that's around 11,495 up to 11,570. So they're all nesting together in this zone of 11,495 up to 11,570, 571. And of course, that was the high on Friday. So does that mean we go short? Of course not. As we wait for a reversal signal and a reversal confirmation signal, we just want to be aware of the pattern coming up into that price zone and the significance of that price zone, because it's a triple time frame price zone. So as of now, this is, again, is the wave 5 of 5 of 5 on 60-minute data, and it's subdividing nicely 1, 2, 3, 4. Potential 1, 2, 3, 4. We're right in that price zone. Actually, it goes up to 11,596, a little bit above Friday's high. Certainly, as of now, if we take out the August 21st low, that's Friday's low, that would indicate that the entire time frame advance from, let me add some data on here because it goes back quite a ways. Going all the way back to the March low should be complete. That's significant. So just be aware of that. Be aware that our daily momentums already do a look back bearish as of Friday. We're in this significant price zone. So once we get into a multiple time frame price target zone, we go to the smallest time frame and look for the reversal signal. In this case, trade below Friday's low. Reverses the bullish pattern. So it's really significant with the potential for being a multi-week high. So just keep that in mind as a trade strategy. May be wrong if it takes out that low. Maybe it's not going to be a multi-week high. Maybe it's just going to be a multi-day high. The whole point is you can position with very minimal capital exposure for the potential for a higher time frame trend, in this case on the downside. So here's gold, one of my favorites, and it's reacting very well to our time and price and pattern relationships recently, as it usually does. Many of you probably don't know that the first report that I wrote beginning in 1985 was called the Precious Metals Timing Report. And I just did analysis, trade strategies, recommendations for gold, silver, and platinum. So I got a long history, not saying that I'm right on all the time, and every trade's a winner, but I'm saying these are markets that really comply with some simple Elliott wave and some basic fib price targets and retracement zones, that sort of thing. Okay, let's take a look. Here's gold weekly. the weekly momentums have made a dual look-back bear reversal. It's very reliable that it would be followed by another 3 to 4 weeks sideways to down. And if we've completed a weekly high as anticipated, gold should be sideways to down into early October at a minimum. Here's the daily. Daily momentums are bearish, but the fast line's oversold. But we've probably completed a wave 2 or B correction a few days ago. So again, we're just in the initial stages of continuing the bear trend. Lots of opportunities here on the short side. If you happen to be long, and if you're for some reason stubborn and stuck on the long position, just keep in mind we probably are in the initial stages of having a pretty significant decline, a major correction in gold. And literally just the end of this week, we had probably completed an ABC correction. And last Wednesday, as I mentioned to our subscribers, if we trade below what I got labeled as this wave B low, then this ABC correction should be complete, and eventually gold should continue to below the August 12th low without trading above the August 18th high. And so we've traded below that wave B low. So again, we're kind of in the initial stages of soon we should continue the bear trend to below the August low. So lots of opportunities there in the short side for gold and silver and the GDX as well. GDX is very, very negative, dual time frame negative. So here's the euro, one of my favorite markets to trade. And any comments that we make on the euro, if you prefer to trade the dollar, if you're more interested in dollar trends, as you know, it's just going to be the inverse. The euro, we're anticipating for the last actually 2 to 3 weeks for it to complete a weekly high, but the setup didn't come until just this past week where we made what we call a reversal week. That was a new high, came right into the end of wave 5 target zone, and then came down pretty significantly to make a lower weekly close, and significantly made a dual time frame momentum weekly bear reversal. So more than likely we've completed this 5-wave advance in a weekly high, and we're going to be sideways to down at least into the first half of October. That's the 38% time retracement against this 5-wave trend. So again, this is just the initial stages, the first week that we made the reversal. Lots of opportunity on the short side here on the euro with very minimal capital exposure. So you can use the Forex, or you could be long the dollar. You could use ETFs like the UUP for the dollar, very low leverage, very safe bet to make with very minimal capital exposure. So just put this one on your radar right now. For the first of the week, we're probably just beginning a weekly bear trend in the euro, weekly bull trend in the dollar. That's it for today. I hope you have a fantastic week. Be back with you next week, next Saturday. And again, please, if you like what you're learning here, check out our DT reports. Take care.